Before we get started with the discussion, what I was hoping for is that we can have a quick fire round of introductions, that we can each introduce ourselves. We have diverse panelists here, ranging from private equity to angel investors to entrepreneurs. So the floor is yours for a quick fire round.
Who should start? Shall I go ahead?
Sure.
So thanks for having me, first of all. My name is Ahmed Rodi. I'm born and raised Cairean. Spent the majority of my career initially on the investment banking side and then moved to the private equity side. I'm currently with Admice Capital Partners. Admice was founded in 2021, and since then we have done 7 investments on the continent. We are a team of 18 investment professionals, and we have 7 offices across Africa.
Me next. So I'm Patrick Watson from the UK, but based in Nairobi. I'm the CFO of Turaco. So at Turaco, we're a health insurance company. We're an insurtech, micro-insurtech, operating across Africa. Our focus areas are health and life, hence being on this panel. Our countries of operation, Kenya, Uganda, Ghana, and Nigeria. We launched in 2018, 2019, primarily in East Africa, and then shifted over to West Africa in 2022, and have been growing there since. Over the last, the first 4 or 5 years of the business, we were a broker. A broker plus model whereby we did a lot of the stuff that an underwriter would typically do, so claims processing, partnership development, communications with the people that are actually insured. And then in 2023, we I wouldn't say pivoted, but we vertically integrated into actually being the underwriter ourselves. So we got the underwriter license in Uganda in 23, and then last month we got an underwriter license in Kenya. So very much looking forward to talking about how to improve healthcare access in Africa on the panel today. Thank you for the invite.
Excuse me. Hi, everyone. My name is Ayo Bami. I am an emergency physician by training. I'm the managing director at Redesign Health. It's important, just a quick background is, grew up in Nigeria, moved to the US for school, and probably for the last decade been involved in a myriad of projects across the continent, anywhere from, my hands at my own startup, but also teaching emergency medicine, which is what I practice at universities in Nigeria. I recently joined a firm called Redesign Health. We're a healthcare venture builder. We've been in the US and in Denmark for the last 6.5 years. In that time, we've built 70 healthcare businesses. We essentially have a model that we believe we have IP around, which is the 0 to 1 creation of healthcare innovation. And so in the last 6 years, we've essentially gone from ideation stage, working with healthcare partners, working with commercial partners, and building out these 70 companies. And my role now is leading our expansion into Africa and India.
Thank you. Hi, everyone. My name is Mike Kofi. I'm from Ivory Coast, Francophone country, so excuse my English. I've been CEO of Africa Capital Market for the past 4 years, founder and managing the investment banking. Background is 12 years at JP Morgan Chase in the US, coming back to the continent in 2012, heading the investment banking firm for EcoBank Group in sub-Saharan Africa, covering UEMOA, Nigeria, Ghana, and Cameroon, focusing on asset management and stock brokerage. Since 2020, we set up Africa Capital Markets with 2 desks. The first one is the corporate finance, raising funds for private sector and public sector equity and debt. And the second desk is the fund management desk. We have 2 funds under management live right now in the real estate and in the sports with Paris Saint-Germain Academy. It's a kind of innovative fund that we set up 2 years ago. And we are launching right now and in fundraising in 2 funds. One is West Africa Medical Fund, and the second one is Inclusion Fund.
Thank you. Morning, everyone. Temi Marcella. My career spans operating at the intersection of finances, investments, technology, and healthcare. For the purposes of this, I sit on the board of Evercare. My background, I started my career at Goldman Sachs and then spent some time in the US for my MBA. Subsequently pivoted to the buy side to work with one of the largest emerging market-focused private equity investors. In 2015, I was part of the team that raised $1 billion health fund. And really the mission behind that was how do you transform healthcare ecosystems in sub-Saharan Africa and South Asia. We ended up scaling that platform to include 18 hospitals, 30 clinics, and over 80 diagnostic centers across 5 markets. And for my better sins, I ended up jumping out of the funds and ended up building, operating, and commissioning what is now one of the largest private hospitals in Nigeria. I still sit on the board of that asset. And I'm an active investor in health tech opportunities globally as well. And glad to be here.
Great, perfect. So thanks to the panelists. I'll close this round by introducing myself as well. I'm Senior Director at Vital Capital, so just a few words about Vital. We're a private equity impact investment fund with 400 million assets under management. We invest to solve critical social and environmental challenges, and that's really where we tap in. So we're investing in 4 themes: in food, water, healthcare, and sustainable infrastructure. And for everything that we do, we really specialize in our unique model where we build and rebuild investments. So we'll come in really early stage establishing, building hospitals, from primary care to agro-industrial centers to doing rebuild, where we'll identify unique opportunities that we can come and help to build and to expand a specific venture. So to kick off the discussion, I do urge my panelists today to consider jumping in with differing perspectives and or kudos to for one another so that we have more of a dialogue. And I'll do my job to help to keep us on task. So to get started, Temi, let's start focusing first on how impact capital can be leveraged to address the health infrastructure gap. And where I thought to get started with is perhaps you can share with us some insights on Evercare and what were the key enabling factors for establishing a greenfield primary care hospital in Lagos. This is a mammoth-sized challenge to solve, and how did you guys?
Absolutely. Well, first I'll say, hence the conference, that impact capital is a very powerful catalyst for unlocking sustainable development, economic growth, and most especially in sectors like healthcare, which historically has been seen more as more in the realms of sort of not-for-profit or more government capital. When we approached the opportunity set in 2015, our focus was on the importance of healthcare and access to healthcare as a fundamental human right before anything else. And our vision was, how do we essentially transform these healthcare ecosystems in key emerging markets in sub-Saharan Africa and South Asia, as I mentioned. The challenge in terms of health infrastructure and the absence of health infrastructure is clearly very well documented, with the continent accounting for over 25% of the global population, over 20% of the world's disease burden, but less than 1% of healthcare funding. And so that was a big sort of opportunity that we saw, and also problem that we wanted to fix. And the pandemic, obviously highlighted the challenges around infrastructure and infrastructure gaps. And so, in terms of the enabling factors, I would say 3 key things helped us in that journey. The first was the right alignment of capital. And so in 2015, when we sort of brought together the stakeholders around the fund, it was really one of the first times that you saw the combination of traditional private equity capital, so purely commercial capital, but also, strategic investors with the likes of Philips and Medtronic coming in, and also then more philanthropic and development finance capital. And so what that meant was that we, and it causes its tensions, but it's so important, especially in sectors like healthcare. We approached it both with a commercial view in mind, but with a large focus and a large focus on impact and accessibility and quality and what that meant for our markets. The second important pillar was patient capital, and so the fund was a 10-year fund, but with 2 2-year extensions, so essentially 14 years. And that is especially important when you're looking at the infrastructure space and health infrastructure specifically. And I would say the third pillar of the strategy was really around gosh, I've lost my train of mind, but yes, patient capital, the right combination of capital, and then the ability to, the third pillar was really a flexible mandate. And so the ability to not just go in and buy and build, but also to be able to do greenfield. And our market entry strategy varied according to the markets we were operating in. So in more mature markets, like in India, we were able to go in and acquire existing hospitals, consolidate, scale. Whereas in markets like in Nigeria, I spent 2 years between 2015 and 2017 looking for hospitals to buy. And we came to the conclusion as an investment committee that, there hadn't been, or there'd been a dearth of purpose-built hospitals, and we're focused on secondary and tertiary care. I think primary care is slightly different. And so that's why we went down the path of building. And so I think that flexible mandate of being able to build and buy is so critical in this space. And today, Evercare has built a brand in the market. It's mobilized additional capital into healthcare, commercial capital, and it's solving a very important issue around sort of high quality secondary, tertiary care in the market.
So many interesting points. I mean, definitely the need for patient capital, and also I'll circle back later to the point on a fragmented market and an attempt to do consolidation, because you guys really built it from the ground up. I do want to zero in on a specific point, shifting from the establishment to the operational side. So in terms of how to make sure that Evercare and the hospital is financially sustained for the long term while trying to keep accessibility and affordability for the market. So how do you find how do you strike the right balance? Mm-hmm. What are the mechanisms in order to entertain that?
And it's the million-dollar question. I think, our thesis was largely focused on leveraging scale as a way to cross-subsidize care and provide access to a larger pool of the population. And so one of the strategies has been around platform strategies. And I've mentioned sort of the footprint, but that footprint has been strategic because one of the challenges we found sort of coming into the healthcare space early was you have a lot of, it's a highly fragmented industry. And that's a challenge when it comes to unit economics, when it comes to running these hospitals at scale profitably. And so having platform strategies has helped us even address shortages and gaps in certain ecosystems by leveraging the strengths in others. So I was explaining earlier that one of the biggest challenges in operating the hospital is actually just the human capital gap. As many know, you have more Nigerian doctors practicing outside of Nigeria than in Nigeria. And for better or for worse, we've built a brand where people see us as a stepping stone into the rest of the world. And so our talent comes and learns from Evercare and then often sort of uses that to parachute themselves out of the country, which is fantastic for them personally, but institutionally a challenge. And so we've focused extensively on the value chain, which includes upskilling talent. And we've been able to leverage our assets in India and Pakistan to ensure that we can train and upskill our doctors. We have remote ICU solutions whereby we have doctors in India that can parachute into our operating theaters in Lagos and conduct procedures in parallel with the doctors in Lagos. So there's a big upskilling opportunity that comes from the ability to build platforms at scale. The second pillar, I think, operationally is the importance, and I know some of my colleagues will touch on it, is the importance of creating digitally enabled ecosystems. And so we have to move away from the traditional infrastructure-focused solutions for care and leveraging technology to drive down the cost of care and increase accessibility. And this becomes increasingly important in healthcare when you're looking at the value chain. So one of the biggest challenges in the market is the referral pathways are broken. And if you can fix that by using technology, whether it be telemedicine solutions, to better triage the healthcare needs across primary, secondary, and tertiary care, and drive care to the point of need, you can then look at sort of lower cost solutions for primary care interventions and then feed into more expensive infrastructure on the tertiary and secondary care side. And the final thing is just innovative financing solutions. We're in markets in Nigeria, for example, we only have 5%, less than 5% insurance penetration, 95% out-of-pocket spend. And so the question of who pays for care is often the single limiting factor in terms of commercial capital being able to underwrite some of these large infrastructure projects. And so, exciting the work that Turaco is doing and others in terms of the insurance piece, in terms of financing innovations around solving the who pays for care, the accessibility issue.
Yeah, wow. A lot of different mechanisms that need to all come together in order to be able to implement. I do want to ask, I'm going to ask to you, Ahmed, shifting to pharmaceuticals and around your thinking in this space, also around how to improve access to essential medicines and how can we reduce costs for consumers for low-income populations. So what strategies can be implemented?
Sure. I think when we look at the continent and the pharmaceutical manufacturing opportunities, we see areas in the continent that are much more advanced than others. So when you look at North Africa, South Africa, you see a much more robust pharmaceutical market with several local manufacturing businesses. And one indication on how robust this is, we've seen several M&As and several multinationals acquire businesses in these markets and manufacture locally. I think on the contrast, when you look at the rest of the continent, there are some major issues that are impeding additional investment into the space. So we have a big issue on counterfeit products. So it's estimated that around 30% of pharmaceutical products that are sold in Africa are counterfeit. You have another major issue, which is Indian and Chinese exports to these markets are very, very material, which obviously these are much larger businesses, much more integrated than the on-the-ground businesses, and hence are able to afford to provide much cheaper products. I think one of the issues we also see, so a lot of the, I would say, manufacturing businesses look for scale and look for infrastructure, right? And some of these markets do not have the scale. And one of the solutions to providing this scale is harmonizing regulatory environments between these markets. So that I think is key. And once we work on these, once we solve the counterfeit issue, once we have tighter supply chains, once we have tighter regulatory requirements for products, we will be able to attract investment into the sector. We will be able to attract South African manufacturing pharmaceutical companies to invest beyond South Africa. So I think there is a need for some changes, and I think it is a very, very attractive market. And I think the fact that local governments, it's very important to have local manufacturing for some of your pharmaceutical products, right? It's absolutely strategic. We've seen historically in times like COVID where supply chains have been disrupted. We've seen when shipping roads have been disrupted. So the need for local pharmaceutical manufacturing is absolutely necessary in our view.
Yeah. So what are some of the steps that you think are, beyond policy in terms of financing to create an enabling environment to create more manufacturing on the continent?
I think, again, patient capital is absolutely necessary. And I think, we've all realized that the continent requires longer timelines, especially when you're going to build something from scratch. So we've seen a lot of buy and build strategies that have been successful in pharmaceutical manufacturing. These require more time to integrate, to drive synergies, to drive results. That's the solution. I think impact capital is absolutely necessary. It's done a lot for the continent, and I think it will continue to do a lot. But we need to be able to attract the rest of the capital pools that are not on the continent, and this is absolutely necessary because impact capital will always be there, but it won't create the level of change we want to see. So we need to be able to provide reasonable returns, reasonable investment, regulatory environments, stable economies to attract commercial capital.
Yeah, for sure. Shifting on the subject matter a bit into how to transform healthcare through technology. We've seen a lot of groundbreaking solutions in terms of increasing access and quality and equity, whether this is telemedicine, mobile health clinics, community health worker programs. So Ayobami, one of the areas that I thought was so interesting was how you guys set up Redesign Health. It's a super unique company creation model. And just as a start, I thought maybe you could tell us a little bit about that. And also coupled with what are some of the promising areas and technologies that you identify to bridge the accessibility gap? So where are you focusing in on?
Yeah, thank you so much for that. I think, the way we think of our model at Redesign is that we're an institutional co-founder. And so when you look actually just in the history of most verticals across the world, so if we even use commerce for an example, we went from mom and pop shops, right, and stands to bodegas, then we went to the Walmarts of this world, and then we moved to Amazon. And I use this example all the time, and I should probably found like a British coffee chain, but it is so much easier for Starbucks to open center number 1004 than it is for all 5 of us on this stand to start a coffee shop. And I think it's not because we're brilliant, but because there is something that actually happens when you develop reps at doing something. And so our model essentially is, you can think of it as 2 parts of a pod. So there is one, which is an early stage venture capital fund. We fundamentally think of ourselves as formation capital in the funds. The reason why we are thinking of ourselves in that way is we actually provide capital for businesses, for at least for the first 3 years of their operation. And so I think that even becomes more important on the continent as we talk about some of the innovations that are happening and what happens after a certain period of time when companies have raised their seed round or how they go for scale. So that's part number 1 of the business. But the second part of the business actually is a platform that does healthcare innovation. And really the unique value proposition that we have is, at least in the US, and I should put that caveat before I continue to speak, because I understand very much that as we enter the market, even though I have personal experience, there's going to be lots of institutional knowledge that will evolve as we continue to move. But we have a team of about 30 or 40 people, and all they do all day, every day is look for white space in healthcare. And they're literally just researching, they're calling health systems. We have almost 200 health systems that we speak with on a quarterly basis. And when we have conviction in those white spaces, when we understand truly what commercial partners are, the example I give people a lot is, there's a business that we recently launched, and it took us 2 years to actually get the right commercial partner before we launched that business. Any startup would have died 4 times over the last 2 years. We'll probably run out of money 5 times over. And so I think the ability for us to actually be like long-standing capital as these businesses are started, the fact that we're very ecosystem-driven, I think gives us an advantage in the market. And yeah, so 70 businesses now. You can imagine we've learned a thing or two about what works and what doesn't work. And I think to answer your second question about innovation and technology on the continent, I think the first thing I want to actually make clear, and I think we said this, when we spoke, is there's actually been a lot of innovation going on the continent for many years, right? I spent a lot of my time in the US helping healthcare startups, think about their clinical models. And in the last, decade or so, there's been this big wave saying, okay, team-based care, let people work up to the top of their license. Let's think about value-based care arrangements. And I think about being a kid growing up in Agege, Lagos, and the person who did my immunizations had like no, clinical background except for the fact that they knew to clean this, put this thing here, and sign me in a ledger. And I think that even, in times when I have been teaching in Lagos, I will see clinicians who will say, oh yeah, I know that this is happening because I can see this clinical sign. And I'm like, I don't know those signs. I know to put them in a CT scan, and the CT scan will tell me exactly what's going on. And so I think, because of the resource constraints on the continent, there's actually been a lot of innovation that happens both in clinical practice, but also in the ways that we just think about care and care delivery as a whole. The difference, I think, is that we've not tech-enabled all of those. And I think that's a very important point to clarify. I'll talk about technology deeper, but I do think that, as Temi was alluding to, there's a unique opportunity for us to continue to think about how care delivery models are done outside of brick-and-mortar hospital systems. And whether that is, I'm very excited when I see models that I think of pharmacies as places for care for patients. There's home-based care. There's thinking about, whether you're thinking about a church, whether you're thinking about a community center. But I do think that there's an opportunity for us to continue to innovate in the way that we deliver care outside of brick and mortar. That's point number 1. Point number 2 is I've actually been very impressed watching what's happening in the diagnostic space. There's a company out of India called Redcliffe, and they've been around for about 5 years. and just actually released a report where they basically said because of their work over the last 5 years, they had saved 500,000 disability-adjusted life years in India and saved the government of India about $400 million. And I think to myself about companies that I know on the continent like Health Tracker and MDAS, and I imagine that if they actually had the capacity to do reports of that nature, we would be amazed by how just the fact that you have better nodes of delivering care in diagnostic centers has actually driven care delivery in a way that we don't actually usually think of traditionally. So that's how I think about that. From the true tech perspective, I feel like it would be amiss if I don't mention telemedicine. I think everybody is like excited about telemedicine. I'm a big telemedicine skeptic. I think that we have gone into a place where we think of that as a be-all, end-all solution. And actually having been a doctor on the end of providing telemedicine, sometimes I'm like, why is this patient here? Like, what? You could have easily Googled this. And I think that telemedicine has been used as a catch-all, but the truth of the matter is that for the use cases which it is mostly used for now, which is urgent and acute care situations, there are way better ways to do that. Now, if you think about telemedicine, and having built actually more telemedicine programs than I care to admit on this stage, the way that we think about success in them is if there is significant longitudinal value for that patient. So telemedicine is something like mental health. Yes, there's value because that patient is going to return to you if they develop a good relationship. Telemedicine in primary care, yes, there's value because that patient should return. And so you start to see, even just from an economic perspective, that the lifetime value of that patient is enough to actually keep that program running. When you're doing it on the acute base, when someone has an STD and just wants to call a doctor, that model I don't think actually is sustainable. And then the last thing I would say is, I used to be a skeptic of this, but I actually truly believe that we will live longer now because of artificial intelligence. And I think that, in the many ways that we were hoping telemedicine would change certain things, I believe that AI actually has the potential to be that node of care for patients who need asynchronous care. I think that when you think about clinical trials, when you think about just drug discovery, when you think about administrative burden in healthcare, a lot of doctors are burnt out. I think that we will find that because of the tech and because of that innovation, that we'll be better off for it. And that's kind of how I think about, the landscape.
Patrick,
can I jump in as well?
Yeah.
I'm a bit of a telemedicine skeptic as well. I think we need to be really careful about how we try and kind of technify healthcare delivery in a number of regions around the world. And I remember in my prior life, I used to work for a drone company. And we had this vision of, well, if we can link up a drone with telemedicine, then we can get it out to rural kind of communities, and we can have it distributed from bodegas. And then you realize there's no Wi-Fi, there's no connectivity. Like, how's that going to work?
Yeah.
And I think what you end up is, it's sexy. There's a lot of VC money going into kind of creating these disruptive models. But I think we shouldn't let it detract from the building of bricks and mortar. And I'm not talking about hospitals in city centers. I'm talking about decentralized models of creating small clinics for populations, kind of smaller populations in kind of level B, level C, towns and cities across the countries. And my concern is it's a little less sexy, it's a little slower growth. Are we focusing on things that are not going to work and wasting money doing that, rather than actually trying to kind of be a little bit slower and figuring out less sexy models that actually work across the continent where there's no connectivity?
Yeah.
I think we're on the same page.
Yeah, we are. Yeah,
Yeah, especially also coming from an ER doctor. You know the urgency of having actual real care, right? So there are the right solutions for different aspects of technology in healthcare, and it's not in every single vertical, that's for sure. But I do want to ask you, Patrick, on InsurTech in Africa as an example, and to zero in on that. So, I mean, with Turaco, what innovations are you seeing and hoping to help scale these in the sector? And what are the key actions that can happen to grow market awareness and to increase distribution in terms of InsurTech?
Yeah. So I suppose I do represent the tech side of things. So being the tech skeptic is possibly not my natural role.
We should all be skeptics in the fields that we work in.
Yeah. So I think the first thing that we tried to do at Turaco was actually just prove that people wanted to buy health insurance, and we did that in the first couple of years. And we have a number of partners that are looking to kind of embed our products because the take-up rate is so high across their networks. The second thing, and actually getting products distributed, the microinsurance model is very different from the normal insurance model. You're talking about premiums of 50 cents to $2 a month. So you can't really have any sort of grit in the wheel of distributing it. It needs to be as cheap as possible. So getting that customer acquisition cost down. Now, breaking down the customer acquisition cost, you've got onboarding. So how do you get onboarding costs down? That's moving to embedding on products that are being distributed as broadly as possible. And so we are trying to partner with fintechs at the most kind of natural partners for us, where we have an API integration and the onboarding is effectively done on the sale of product. We are trying to, now this isn't a tech innovation, this is, as we started, it was fintechs. To actually get proper distribution, we need to take a step back from that and start being able to engage with organizations that are maybe a little bit more analog, and so, or have legacy systems. So the larger banks, so really getting distribution is getting with the bigger players that are a little bit less digitally enabled, and getting on their systems and doing that KYC at the point that they bring on clients. But that's at the kind of onboarding piece. Embedding is realistically the way that we kind of go there. Then actual servicing, I think, is where some tech can come into play here, which is local language. So reducing the touch points that require a person servicing a customer of insurance. That's having local language capability. Now, there are thousands of languages across all of the countries that we operate in, and there needs to be an automated way of being able to answer the Q&A, the basic Q&A on text messages or on WhatsApp with the clients as they come up, as opposed to what currently happens is it all goes to our call center, and that adds to the cost of providing the insurance, and that adding to the cost adds to the cost of the actual insurance product. Additionally, there's documentation. So one of the other kind of big stumbling blocks is getting the right documentation through from the client. We do omni-channel. They can basically give it to us however which they want, physical document, WhatsApp, text message, email, whatever is the easiest way. I think for us to kind of get mass distribution would be for us to partner with, again, a low-income bricks and mortar, widely distributed model that can actually do that documentation for them, for the clients, and that gets rid of a few touch points there. And then the kind of big elephant in the room, which is not that tech kind of advanced here, but it is in all of the countries we operate in, is direct debit. It just doesn't exist. And that means the provision of insurance, a provision of a 12-month or a 24-month insurance product, if you have to have a touch point every single month, and it's normally twice, 3 times, 4 times a month for every single one of those clients, across 1 year, that's 50 touch points. Every touch point is a text message or a WhatsApp message or a call. Each of those adds to the cost of the actual, of the provision of that product. Yeah. We are moving into direct debit in a number of our countries, but it's something that is not prevalent and doesn't exist in the majority of Kenya. We're moving into it with Safaricom, and in Uganda there was a kind of trial with Airtel where there was a direct debit element there as well. The kind of next thing is evolution of product. Products in East Africa specifically, they're very basic products, and so you need to evolve the product of insurance as the market evolves. What currently happens is we're providing a very basic inpatient insurance cover. So Kenya's around about 2% insurance penetration. As that grows, then you'll start moving into providing outpatient. And so we need to kind of evolve the product offering in country as well. And then we provide education and awareness. But again, every time we provide education and awareness, it's text messages going out, it's WhatsApp messages going out. So there needs to be a way of how do we decentralize that and maybe have institutions provide that for us. All of these things go into the cost of providing a product and getting that last mile distribution, which is quite expensive. Yeah. And in a 50 cents product or a $1 product, you don't really have much margin to kind of provide a premium plus service.
Wow. And I mean, across the spectrum of what we've heard here so far, between primary care, technology, everything ranging from pharmaceuticals to insurtech, there are huge bridges in the financing gaps. So to shift to mindsets, over to you, Mike, and thinking around the financing element, I wanted to ask around what strategies are you implementing to address challenges of funding and investment in Africa's healthcare sector with a and also having a sort of forward-looking perspective on how should we gear public and private sectors to collaborate to enhance funding. And I know those are really small questions.
Okay, I won't come back to the challenges that we have in the sector, as we all know what's happening in Africa. We use 4 points as 4 points to set up a strategy to help the industry get finance. The first one, we all know that we have cost of borrowing that is very high. And the issue that we have in our region is that you have interest rates that are high, but also tenor or maturity that are very low, between 5 to 7 years. And when the rentability of this industry is between 10 to 15 years. So you have this mismatch in interest rate and tenor and maturity of loans that is a barrier for private sector to get into the financing sector. So what we are trying to do is and we all talked about having the patient investors on board, but it comes with the second risk that we have in the region, that is a political risk, that we need to deal with it, because you have patient investors that come on board for 10 to 20 years, right? But every 5 to 7 years in Africa, you have elections. And what happened during the elections, 1 year before the election, prior to the election, and 1 year after, you have the economic slowdown. So it makes it difficult for investors to come and plan to get into the sector in the long term. What we're trying to do also is to address the governments and the regulatory framework, because you have a weak regulatory framework in this industry in the region. And so that prevents the barrier as well for investors to come on board. And the third one is the infrastructure. We have weak infrastructure. We have weak infrastructure with technology. We are way behind the European or the US, just because the government and the public sector is not investing enough into the health sector. When you take a look at the GDP contribution to the sector in Africa, it's about 5 or less than 5%, if I'm not mistaken, and in Europe or otherwise, it's close to the double digit, right? So there is this lack of investment from the government that is a barrier as well on the infrastructure. So what happened is that, so what we set up for the past 2 years is to work with the government on the PPP side, so that the government, the private sector, and the DFIs can get on board. So I think Temi mentioned that the success that they had in Nigeria is that they were able to have an ecosystem that would align. This is what we are not able to do right now in Africa. We don't have the private sector, the public sector, the philanthropic investors all together in the same time, have the same vision and get on board and do the same thing. So because of that, you're always going to have a lack of investment. What we are doing right now, we set up Africa Capital Market, my company, my investment banking firm. We launched a fund, West Africa Medical Fund, 2 months ago. It's a fund that is domiciled in Mauritius, has a size of 75 million euro. It's not as big as the one that managed Temi. But what we are trying to do is to do acquisitions and developments, improve the equipment, medical equipment of the hospital and clinics locally, and then also work with the government to have trainings. Because we are not talking a lot, we are talking a lot about investment in equipment and clinics, but what we should know is that we have a gap, and you have a scarcity of doctors or nurses. They are not trained well. So we need to work with the government alongside the investment that we are doing in the hospitals, so that they can have a university or better trainings for those actors in the industry. Mm-hmm. And the last one that we talked also to with the government is to issue more social bonds. Social bonds into that sector, because today you have a lot of infrastructure bonds that are launched in the capital markets. I'm talking the capital market in the region. When I say the capital market in West Africa, we have infrastructure bond, we have green bond, we have all kind of bond, but it's very rare that you see bond dedicated to this industry. And it will help because when you have a social bond, the investors that comes, they have 2 types of returns. They have the financial returns, but also the social returns that they are taking a look at it. And then you can have an international investor come on board. And since it's regulated, because in the capital market, you should be able to attract more investors and then improve the investment in the region. So that's pretty much what my 2 cents.
Yeah, that's a lot. And an interesting take on social impact bonds. I really hope that really comes to fruition. It's an interesting tool. And
definitely. It will help because today, even if you take the capital market in West Africa, the BRVM, most of the tenor, the maturity of the bonds, they are 5 to 7 years, or most of the highest will be 10 years or 12 years. You don't need that. We need at least bond that will go up to 20 years, like you see in the US or in the European market, so that, but have that compartment of social impact that you will get with the return that you'll provide. And I think because it's regulated and so it diffuses the regulatory impact that investors are seeking with the government assistance.
Yeah. So I hope we have time for one last question. So just to circle back to the point that you were focusing on the governance and the regulation side, Temi, I know we were kind of pointing back to the example that you guys have actually had some success. So maybe just to wrap up the conversation on a positive note in terms of successes, in terms of working on the policy side to support healthcare initiatives. Maybe you can leave us with a remark in terms of what was the key pillar that really helped you to move that along and to create an enabling environment to be able to lift up Evercare?
No, absolutely, and quite often in our part of the world, sort of private sector is ahead of regulation, and the onus is on us to work with the public sector to drive regulation in the right direction, to de-risk some of these elements that we've talked about. I sat on the Health Reform Committee of the outgoing administration in the previous government in Nigeria, and I sat on the Transition Committee of this government. And we did quite a bit of work around the government's role in terms of creating that enabling environment, specifically in addressing some of the issues around the ability to pay and affordability issue, the demand side of care, which will ultimately unlock the supply side. And the good thing in terms of ending off a good note is there is progress. I think it requires a lot of thinking and support in terms of technical structuring of what these models could look like. But if we take examples, for example, in Indonesia, where between the public and private sector, 90% of their lives are covered, which means that the most vulnerable in societies can access care, and you're moving some way in terms of addressing the affordability issue. So there are models out there that work. I think as long as sort of public sector continues to focus on its role of creating the enabling environment, doing some of the work that was mentioned around advocacy and education, and really encouraging the right health-seeking behaviors from the community, and then working in tandem with private sector on PPP-type initiatives that can help de-risk and mobilize capital. So those conversations are happening, and
All right. Well, if only we had the opportunity to build out all of these platforms to really work together to make it happen.
Correct.
That is what we need. So thank you to the panelists. This was very insightful, and hopefully we will see what progress we can make.
Thanks, Mark.
Thank you.
Excellent. Thank you.